One of the questions when we bought the site, right, how can we make a big impact on this? Right, we're going to build in timber. It's obvious, right? It's the lowest carbon impact we can have in creating this building. And we assumed everyone else would know how to do it. And when we went to our design teams, the best design teams possible, they were like, actually, this hasn't really been done that much, and you're one of the first doing it. It was like, wow, really? Okay. When I started, the revenue was about £500,000 with a team of about 12 across Central Europe. That team went down to about 6 in redundancies. When I left, we were a team of 25.
Wow.
And we had a revenue of about £4.5 million and a profit of about £3 million.
Welcome to the People Property Place podcast. Today, we are joined by Patrick O'Gorman, CEO and shareholder of Bywater Properties. Bywater is a best-in-class B Corp, sustainability-driven investor and developer who are fully committed to investing everything from their energy, time, and own money to deliver exceptional urban projects with lasting city-scale impact and a strong return for their co-investors. Patrick has had an incredibly successful career, having transacted over £1 billion worth of real estate, both as a principal and consultant. At 26 years old, he was the youngest European director for CBRE as head of capital markets in Central and Eastern Europe. And it gives me great pleasure that he joins me on the podcast today. So Paddy, welcome to the pod.
Good morning. Thank you for having me.
Not at all. Well, look, the place that we always like to start these conversations is how you get into real estate. So we'll start there before coming on to your background and a little bit about Bywater and what the future looks like.
Yeah, most certainly. I think I was never quite clear on what I wanted to do at school. I didn't really want to go to university. I wanted to run a business. I wanted to set up a business from scratch, but I was convinced by my teachers and my parents to give university a go. So I went and did what a lot of people do when they're not quite clear on what to do, which is geography degree. So I went to King's College London, studied geography. During that, I had a great time, of course. And we did quite a lot of property-related modules, City of London history, the positive and negatives of gentrification and regeneration. And that was at the same time where you had people like Sarah Beanie doing TV shows about how to create money out of real estate and houses, etc. So that was where the interest came from. I didn't really know much about it in terms of what it was as a career and how to get into it. I remember looking about what as a chartered surveyor does, the different sorts of chartered surveyors. Anyway, so I thought I'd give it a go. After coming out of university, I still had a small ambition of trying to be a professional rugby player. So I ended up going over to Northern Ireland with a contract with Ulster to play rugby, but knowing that there's a strong chance I might not make it. Part of the agreement was that I'd get a job with a chartered surveying company called Osborne King to do 3 days a week in property management. So that is how I started my career. And I started a distance learning real estate degree with Reading while I was playing rugby and working 3 days a week.
So there's a bit of a combination of geography, not knowing what to do, being entrepreneurial and wanting to run a business, bit of TV and thinking real estate's all around me, having an impact or a career in that looks and sounds interesting.
Yeah, I really wanted to run my own business. That was always what I wanted to do. So I was trying to work out how and where I might do that. And at the time, I think real estate was becoming an important industry and really professionalizing. And I thought that would make a good starting point.
So you moved over with Ulster, did your part-time masters and got a job 3 days a week to give you a bit of structure.
Yeah, failed with Ulster, yeah.
After how long?
I think by Christmas of that season, I had a fairly good idea that I was probably not going to make it as a rugby player and that I needed to do something different.
So how long were you in management for?
So I did it for basically 9 months. At the same time, I was selling supplements as well as a little side hustle to see if that might work. I've always had these little side businesses, but so I did property management at Osborne King for about 9 months, And I think I started applying for grad schemes in London in sort of for January, February time.
And did property management give you the window into real estate that you're looking for? And did you love it?
There's a lot of rent collection, traveling around, juggling keys, trying to get into different properties. It was proper messy stuff. And it gave me an insight. I think, I didn't know much about the real estate industry. And so I was coming in thinking that chartered surveying companies owned real estate. And it's actually very hard when you don't know anyone working in real estate to work out how to get into it. So I think I was fortunate enough that it gave me a good insight into how it worked a little bit more.
Yeah.
Still with big gaps in my knowledge, which I was, but then I could work out avenues of how to fill those gaps.
Yeah, I remember when I first got into headhunting space, really struggling to get my head around the client side versus advisory side and how it all fitted together. So it's reassuring to know someone who studied it also might have struggled to get their head around it too.
I think it's part of one of the problems of our industry is, actually I've listened to a lot of your podcasts. Most people have a friend or family who are in real estate before they come in. I don't see that as a positive part of the industry. I think we've got to try and find a way of getting people in from far different backgrounds. And that starts early. I think you and I obviously know when you're going through a recruitment process now, most people have gone through the main route. And I think we've got to get in earlier at 13, 14, 15, 16 to try and attract different people into the industry and try and give them an understanding of what the industry is, what jobs you can have in it and how you get in there.
100%. I completely agree. And I think there's lots of good work that is happening across the industry. Just maybe more of it needs to happen.
Yeah.
And it's also one of those things that takes a little bit of time to filter through. So after your management and failed rugby career, you kind of moved back to London, did you?
Yeah,
and you landed at CBRE?
Moved back to London with CBRE and had a brilliant time at CBRE. My first placement was city agency, so office leasing. It was a fantastic job. The most fun job I've had. It was 2004, 5. So the market was okay. Lots of office launches, new buildings being built and finished. Brilliant work environment where we were working really hard. I remember getting in the office at 6:30, 7 o'clock to try and get everything done before you had to do your inspections and things. Great team, some people with which I'm still very good friends with now. And so I did that. And I knew, again, I was trying to work out where the different elements of the industry were and how to go. Obviously, I knew I had to do an element of valuation to become a chartered surveyor, which seemed to be what you were meant to do. So in order to do the chartered surveying route, I went to do my valuation stint. I did plan on going back to city agency, but at the time I then had a few more conversations with people in the investment team and realised that was probably where I was best suited.
Is that because that's where the big money is made, or is tapping into that kind of entrepreneurial flair that you alluded to earlier?
I've always liked deal making, so I was attracted by that. Again, I think it wasn't just in terms of buying and selling buildings, but I wanted to know in terms of what goes on after that. So when clients bought a building, what do they do with it? How do they make money out of it? What's their purpose with the building? And then, so it was more about getting closer to that stage.
Yeah.
So that was the main reason. Whereas I still think doing specific roles like city agency would be a fantastic career. I just wanted to have a bit more of a wider vision about how to do things.
And so you landed in which investment team and how?
Central London. And I was very fortunate to be the bag carrier for Stephen Hubbard, who was the chairman of CBRE and is now one of our board advisors. So he's remained my mentor for 20 years now. And it was a brilliant learning curve. It was 2005, 6, 7, booming market. We did some very large transactions across central London with some really interesting people. And I just learned a huge amount. It was a large part of that was running numbers. A large part of that was doing the analysis and then leading on the due diligence front. I was fortunate to have a brilliant client called Jeff Goldberger from Atlas Capital, where New York based, and we did a lot for him, and we really sort of run that deal. So it was fantastic learning curve, and I think that gave me a real clear idea of what I wanted to do and how to do it. And I think from then on, I had a fairly clear route to what I'm doing now.
So Stephen kind of fronting the deal, he had the relationships with the clients, and you were doing a lot of the heavy lifting.
Yeah, Stephen would front everything, and I would be working the numbers out, dealing with all the different consultants in the background, and then coming to Stephen, we'd have a chat, and then he'd present it in a much better way than I would ever be able to present it to the client, and if in terms of negotiation with the other side. So fantastic learning curve to have someone like him to learn from.
So talk to me about the move to the Central Eastern European team. What happened there, and why did you decide to?
Again, I think during those couple of years working in the London team, I sort of started to develop my clear ambition. And again, it's come back to running a business, building a business. I was 25. I knew that my way up in central London, I'd had to been carrying bags for a lot longer. And I didn't quite have the patience to do that. And so I spoke to Stephen, who had a head of European investment as well. I said, I want to go abroad. I really want to go to the Middle East. I'd spent a lot of time negotiating with my girlfriend, now wife, about moving to the Middle East, and she finally agreed. And I went to Stephen's office. He had the big office at the end of the big office floor. And I remember getting really nervous. And I went over to Stephen and said, can I have a 5-minute chat? He said, yeah, come on in. I said, I really want to go abroad. I've learned so much, but I really feel it's good for my career. And I really want to go to Dubai. And within about 2 minutes, he goes, no, Paddy, you don't want to go to Dubai. You want to go to Central Europe. I'm thinking Vienna, Prague. I was like, oh, this isn't going to go down too well. Anyway, I went back to my girlfriend, now wife, and said, I'm not going to Dubai. Eastern Europe, Prague, Vienna. And she goes, oh, maybe then. And then the next day I went and he goes, Paddy, I've got this for you. You're going to Poland. I was like, oh, this is really not going down very well. Anyway, I ended up going to Poland.
With your girlfriend?
Eventually. It took her a bit longer. And it was just a brilliant move. I had 5 years in Warsaw. I started off as a number 2 to the head of Central Europe. So I was deputy head of Europe, Central Europe, in capital markets at 25. It didn't work out with the head of, because he was commuting back and forth from another country in Europe. So by 26, I was running capital markets in Central Europe. It was a terrible time because it was 2007, we had a good year, but then 2008, things started going wrong. 2009, things were terrible. So I was making redundancies in 2009 and then started rebuilding the team in 2010. And it was fantastic because CBRE weren't a very dominant force in Central Europe. And I'd come from a brilliant base in London, and we had a brilliant name and the green machine was working. You just had to know how to use it. Jones Lang was fantastic at the time. And we basically just said, all right, Jones Lang are doing it that way. How are they getting to that? And how can we copy them? So myself and the team worked every step and we just got up to stage. And when I left, I think when I started, the revenue was about £500,000 with a team of about 12 across Central Europe. Team went down to about 6 in the redundancies. When I left, we were a team of 25.
Wow. And
we had a revenue of about £4.5 million and a profit of about £3 million. We were the most profitable team in Europe per head by the time we left. So it was a brilliant learning curve. And the guys, my bosses at the time, Andreas Ritter and Colin Waddle, who were the head of Poland, head of Central Europe, just let me get on with it. So from a mid to end up living late 20s person, running a team like that was just an amazing learning curve, but just a different learning curve. I felt like I wasn't an experienced agent, but it was more about how to run the business, how to recruit, how to do best practice process, etc. It was just fantastic.
And if you'd stayed in London, it would have taken you 15 years to be able to get to a point 100%. Where you could get that exposure, right?
100%.
And so what kind of deals were you doing? And obviously there was a language barrier and, it's not as a sophisticated market.
It wasn't. Well, it wasn't from our perspective. Again, Jones Lang were very sophisticated at it. In some ways more sophisticated actually, because they were coming at it from almost like an investment banking background. So actually, it worked out being brilliant. We just had to teach ourselves how to get to that stage. Most of my clients were international, not again, I was dealing in Poland, Czech Republic, Hungary, Bulgaria, Slovakia, Romania. So most language was the English was the most common language. All my clients were international from all across Europe, all across the world. So it was all done in English. And it was just I mean, it was great fun. It was really good fun. You know, we lived like royalty out there, and traveling around Central Europe and Europe was brilliant. Being part of the European investment team at CBRE, run by Johnny Hull, was fantastic. It was just a brilliant experience to have in your 20s.
Did you come back to the UK after a period there, or what happened? And
so again, knowing where I wanted to go, which was running my own business, I was trying to work out how to do that. This is where I guess Bywater came in. A brief summary in Bywater. Bywater was set up by Richard Walker and Theo Michel in Poland, and I think it was about 2006, 2007. Poland expat community, it was a small community, and we met, we got on well. We didn't do any work together, but we got on very well. Richard Walker's family business is Iceland Foods. He shared his own ambition of going back to the family business and getting involved in that. And at that point, he knew my ambitions were, you know, to be an owner of a business and grow that. So we started having those loose chats about, why don't we, you know, if Richard moved to Iceland, could I come in and work with Theo? And then we started doing that. At the same point, from a CBRE perspective, knowing what I helped to create with the team and led and built a great business, and knowing that I was just going to leave it and leave all that value on the table, it just reinforced my view. You know, I've got to be an owner. I've got to get involved in that. So that was how it worked together. That was, I think, 2012. I went back with CBRE to do a sort of overseas role. I was traveling back and forth to the States to try and drum up business between the US investor base and the UK investment market at the time of the Summer Olympics. But I was already negotiating with Rich and Theo about how we might come in and restructure the business with my involvement. And I think they thought quite clearly about where they should set up a business as a young business. And Poland was booming and growing, and that was why they decided to go there. So they both moved over there for a couple of years. I don't think they quite did the 5 years that I did. And that was where they grew the business. And I think we always call that Bywater phase 1, which I wasn't part of. And you know, I know that they had a lot of very interesting, very Central European stories to tell from there, and experiences that helped them with Bywater phase 2 and Bywater phase 3, where we are now.
And in terms of that early stage, was that Iceland family, you know, money that kind of funded and helped scale working capital and also start doing deals and then bring in co-investment, et cetera? Is that how it kind of got off the ground?
It was effectively a multi-family office. The main family was the Walker family, but I think they had 2 or 3 other families alongside, similar Northwestern business families, and that was where the money came. So relatively modest in scale. You know, I think the largest investment they did might have been 10 or 12 million pounds in a office building in Szczecin. So relatively modest. But they were literally doing all the accounts on their own, the paperwork on their own. It was very hands-on.
So you decided to leave CBRE, or you negotiated an exit from CBRE, and Richard took a bit of a step back day to day from Bywater, and you kind of filled that hole. Is that right? Yeah,
exactly right. So Richard then became the chairman. Theo and I were the day-to-day owners of the business. It was effectively, legally a new business that we set up. And that was with additional family money. And again, we started Bywater phase 2, let's say from 2013 when I joined it, focused on the UK, focused on our own money. So, you know, Theo and I were investing 20% in every deal. So everything I had earned from CBRE went into Bywater. We then also invested alongside the Walking Money and also the Dallywell family, which is another owner of Iceland Foods, as our key investors, with a few other investors alongside. And again, focused on trading, a few developments. We did some brilliant deals, 2013, 14, 15. It was a great time to do deals. But we were our identity was family office stroke propco. And again, we were trying to work out our growth route and how we would grow as an investment business and as a developer. And that led us into bringing in and creating a fund. So we created a relatively modest level fund, but with more institutional money and overseas money. That was started in 2017, and we were investing that 2017, 18, 19. And we invested that into 4 deals. I guess leads into Bywater 3. An office building in Scotland, which we still, a low carbon renovation project, which we still own. An office building in Manchester, again, refurbishment, repositioning of an asset there. One in London, near King's Cross, and then Paradise, which is our mass timber office building.
So before we come on to Bywater 3 and the change in the business, can you just talk to me? So you and Theo were the owners of the shareholders of the business. How did you split your roles? Who was responsible for what? And what did your team look like? And then thirdly, if it's not too much of one question, what was the strategy in terms of what are you running at? What are you going after? What kind of deals were you looking at?
So in terms of our roles, we started off, Theo and I, doing most of it together. It was very much a joint role of us looking at how to do things. We are very different personalities, proudly very different personalities. The 3 of us are very different personalities, but we would do a lot of it together. We had a head of finance who would do a lot, and then we brought in a fantastic analyst who started straight from Reading, and that was essentially the core team. We went up and down a little bit, but that was the core team that stayed with us the whole way. Eventually, over time, Theo's passion is in design. He's got a PhD in architecture from Bartlett. My strength is on the finance and the deal side, so we naturally concentrated on those areas. In terms of our strategy, it was to create profit out of the money that we were investing. It was as simple as that. So because of that, we were doing deals across the country. We did one deal where we traded it in a day and, made a fantastic return.
How'd you do that?
We put an option on it. There was an adjoining owner which had a special interest, and during the 3 months that we had, we flipped it to the adjoining owner. That was a deal in Belfast. We did very well out of that. But it was a financial deal. It was a great one to boast about, but we didn't really get much other satisfaction out of it. And at the same time, Richard was doing great stuff with Iceland Foods and exploring his passion with environmentalism, sustainability, in terms of Iceland Foods being the first supermarket to ban plastics in their own brands, the first supermarket to ban palm oil in their own brands. And that was 2016, 17, 18. And that was when we were really coming together and fine-tuning our purpose, fine-tuning our strategy, and leading into where we are now.
So these were separate sidecar deals with individual families that you would just transact on, make money, return the capital. And then did this roll into the fund as well that you raised, or was
no? So everything, Theo and I invested 20% alongside. Richard, through his family, was investing on time, but Theo and I invested in everything, and it was a really important part for us to be aligned. But that had its limitations in terms of growing the business, because it was limited to the amount of money we could co-invest. So when we created the fund, we brought in new investors, new institutional investors, which we didn't have a long-standing relationship with. So I think that was where we started diversifying. We still, that first phase of investment, we still have a strategic land site where we still have that together, and we'll pursue that strategy independently. It was less time constrained. The fund was an official fund, 2-year investment period, 5-year hold period, and then a divestment period at the moment.
Yeah.
So that was, and at that stage, we're like, well, we might do a second fund, a third fund. And that was part of our ambition. But we knew, real estate requires a lot of cash.
Yeah.
It requires a lot of equity. And we knew we had to expand our equity position in order to fulfill our real estate ambitions. Because at the time we were really growing our ambitions about how can we, as a small business, make a real impact on the built environment and our country and our planet. I mean, how can we do that? And we knew we needed to grow our equity base in order to do that.
So you transitioned from deal by deal, family office backed, to raising a fund, which is a very different mindset and mentality. Even getting your head around and having the ability to raise a fund. A lot of people are just operating partners and they'll just co-invest. Maybe not 20% or 40% if there's two of you, a much smaller part, so there's alignment. That must have been a big step change or a big growth period to get your head around.
Huge growth. I mean, I started off a bit shy about saying this, and now I'm quite proud about saying it. The learning curve that we've been through in Bywater 1, in terms of collective learning curve, and Bywater 2, has been dramatic. I find it incredible when, let's say, some people at 30 have managed to build a successful real estate investment development business, because there is so much to it. We're doing equity raising, you're doing debt, you're doing investment strategy, you're doing reporting, you're doing audits. The learning curve on all of those is dramatic. And we were doing that with a small team, still very hands-on. And again, you've got to look at what your purpose is in this. And we were sort of fine-tuning that to where we want to make an impact and how we go about doing that. So it has been a brilliant learning curve. And again, come back to our characters. We are 3 very different people. And I think that has always been our major strength. We come at things very differently. We come at decisions very differently. But we have a clear ambition together there.
And your values are aligned, which I guess is trumped the other maybe disagreements or challenges or growth bits that you run into?
100%. And I think we're very clear where we want to go now and how we want to get there. And that is the essence of all of our decision making now.
So can you talk to me a little bit about what those values are, what that purpose looks like, and the 3 of you, how you got to that point? Because I think it's an important part for the next part of the story, right?
Yeah, it is. Richard was certainly a catalyst in that. Richard was coming at this clearly from an environmental position. He's always been passionate about the environment ever since I've known him, which is a long time now. And he was implementing that within Iceland Foods. At the same time, Theo and I were exploring how we could work within the built environment, but with such a small scale in terms of the developments that we were doing. And we've always referred ourselves as corporate activists. You don't have to be a big company to make a big impact. You can be a small company to make a big impact. And that's the way that we've tried to go about things. So how can we use innovation, which is, one of our strengths, and how can we use the brilliant brains of people within our design teams to help innovate, to create something really special and act as a catalyst for change, both in the sustainability front, but also in terms of social impact as well. On the sustainability front, I've always felt that we've been leading the charge. And it really helped that we were our own decision makers. We had very flexible capital. So, on the timber side, one of the questions when we bought the site, right, how can we make a big impact on this? Right, we got to build in timber. It's obvious, right? It's the lowest carbon impact we can have in creating this building. And we assumed everyone else would know how to do it. And when we went to our design teams, the best design teams possible, they were like, actually, this hasn't really been done that much. And you're one of the first doing it. It's like, wow, really? Okay. Let's explore this. And now what we worked out is that larger companies couldn't have taken those risks. They had to go through too many hurdles, too many investment committees and strategic decision makings, where we were independent, flight of foot, that we could do that. So as a small company, we could crack on, explore that innovation, get on with it, where other larger companies couldn't. So that helped. And that's sort of been the route that we've been pursuing since then. The social side is a bigger question and more complicated, as developers, evil developers, which is quite a common perception in the UK market and other markets. How can we make a positive social change? And there are some brilliant developers, investors in the market trying to lead the way. I'm not sure anyone's completely grasped it yet, but I think the main thing is we're all heading in the right direction. But it's trying to be able to really push for sustainable change and social change within the built environment.
What, from a social perspective, you said there's a perception of evil developers. Why is that? And what is the narrative that needs to change to be more socially mindful, or people to be more accepting of sustainable developers?
There's a perception that developers are 100% focused on profit, and they'll do anything for profit. And I'm sure, and I know there have been some terrible cases of that happening over a long period of time. It's changed recently, not just within our business, but within the listed real estate businesses, within the large UK institutions. Sustainability and social impact have become some of the key objectives of all the major businesses at the moment. But I think the history has put a big stain on the built environment as an industry, and real estate as an industry. There are some real big social conflicts at the moment. Housing is a big one. We are massively short of housing. We're massively short of affordable housing. Clearly, we know that real estate has had a big negative impact on the planet. We represent 40% of carbon emissions globally. How do we reduce that? But I do feel that the industry has changed dramatically over the last couple of years. I mean, you think about when you read the magazines and you hear the podcasts like this, in terms of just the last couple of years, how much that change has accelerated. So I do think we've got some great leaders in that position, and and hopefully Bywater is one of those, and hopefully is perceived to be one of those. And I feel that we are passionate about trying to do our part and lead and be part of that leadership in terms of change. Yeah,
I'd definitely say you're on the front foot. You're an early adopter of trying to drive it. As you said, you've got the flight of foot and ability to put your own money where your mouth is, rather than rely on appeasing external investors. Or is there a bit of marrying up your own values with the values of external capital?
Well, I think that leads into Bywater 3. Because, as you know, half our business is now owned by another company called Sumitomo Forestry. We did that corporate transaction at the beginning of this year. It started with them coming into Paradise, our mass timber office development, as a joint venture partner beginning of last year. Sumitomo Forestry is a listed Tokyo company. So they now are 51% owner of Bywater. Where we are really lucky to have them is we completely share each other's purpose. Theo, Rich and I were in Tokyo last week, And every meeting we have, every discussion we have with any of the board members or any of the employees at Sumitomo Forestry, we are talking 100% the same language. When we're looking at investment decisions, our number one question is this reducing our carbon footprint in terms of that project? How are we using innovation to reduce the carbon footprint of that investment? And then can we use innovation of timber within the design? Those are our first questions before it's talked about what our investment return is. And that is where we're very lucky. So as we are now in Bywater 3, and we have a fantastic source of equity to fulfill those real estate and those sustainability ambitions that we've got a brilliant partner that's completely aligned with our purpose.
So Bywater 1, family capital, kind of co-invest, deal by deal, kind of probably more profit-orientated, flip, churn, like classic property company. Bywater 2, fund, big growth there, governance, how you go about structuring it. And then Bywater 3 is kind of a single, very well capitalized, Japanese, values-driven investor that's got 51% ownership of your business, but is giving you a massive pot or access to capital to go and deploy and supercharge the business.
100%. And I'm still learning about Japanese culture, which is everything I've experienced so far has just been fantastically positive. But one of the main principles is long-term. I think I should be fine to use this as an example, but when we first had our corporate heads of terms together, I think the only way we could be a positive leaver was through death.
Really?
This is very much a long-term partnership. And again, in terms of when we're looking at investment decisions and business decisions as well, in terms of investing in the team, investing in our expertise internally, it's all about a long-term, lifetime and beyond lifetime vision. As I said, Sumitomo Forestry has been going since 1691.
Yeah, and I think I read 800 million US net profit last year.
Yeah.
They're involved with building 25,000 homes globally through various different businesses and subsidiaries. This is a huge international conglomerate, I guess, with value and purpose right at the heart of everything they do. And there'll be a lot of people listening to this who go, that is the golden ticket to get a partner or build a relationship like that. How did that come about in terms of being able to meet them or get involved? I think you touched on they were the equity on the Paradise scheme.
So we hired, when we got planning permission for our mass timber Paradise scheme, we hired Knight Frank to go and find a partner for us. A joint venture partner, forward funding partner, sort of open to what the market would be. It was the middle of COVID when we got planning, and when questions started coming about the use of the office, etc. And we went through a thorough process. Through the Japanese desk of Knight Frank, they introduced us to Sumitomo Forestry, who had been for some time looking for a way into the European and specifically UK market, not just real estate market, timber forestry market as well. So when Sumitomo Forestry saw this opportunity, Paradise, to team up with us, who clearly shared the same principles that they did, they actually committed themselves to 2 weeks of isolation in their own bedrooms back in Tokyo to come and visit us for 2 days.
Wow. So
we knew they were serious when that happened. So that was how it came about. We ended up doing that joint venture on Paradise. We went out to Tokyo to meet them after the deal on the property. We went out to go and meet the board to discuss longer term views about how we might work together. That was when we really understood our commonality and how us coming together longer term would really be beneficial for both of us. And we started the discussions about a corporate merger as such.
So can you just give me a bit of an overview of the business today, people, properties, and then what the plan is moving forward?
So we're still a small team at the moment. There's 10 of us at the moment. We have been focused predominantly on workspace this year. We have bought an office refurbishment with timber extension project in Clerkenwell. We are due to buy something in the next week or so in a major UK city. Again, low carbon office renovation with 2-story timber extension. And we're looking for our third workspace project this year. We've just hired a head of living who will start with us next year. And we have a major push into the living sectors next year. Living, to start with, will be build to rent and student accommodation, but we'll look to extend that to single family housing at some point in the future as well. As you mentioned, Sumitomo Forestry last year built 25,000 homes across the world, predominantly in the States. We have a huge knowledge of how to build in timber, how to do low carbon, and we need to bring all of that knowledge into the UK and adapt it to the UK market. So that's what we're planning on doing next year. So next year we've got more workspace projects that we're looking to buy, and then we're going to start the living and hire more people. So we are building a team, and a long-term team. Again, we're looking for people that will be with us for the long term, people that have got a view and share the culture that we have currently and that we're trying to grow.
Timber is an amazing material, but it's not without its challenges: snagging, insurance, fire risk, height restrictions as well. Some people listening to this wouldn't want to go anywhere near it. Why have you? What would you say back to someone, or how have you kind of been able to reconcile, going to that additional length of hassle fundamentally to utilize that material?
It comes back to a little bit about purpose. Using timber in construction is one of the most impactful ways of reducing carbon in the development process. So that's the reason we're focused on it. There are a number of difficulties with using timber, but again, we are fortunate that we've got a brilliant financial partner who has a brilliant knowledge of timber. They have an amazing research facility 2 hours outside of Tokyo with hundreds of people with white lab coats looking into how timber burns, how it compresses, how it bends, how we grow different types of trees and apply that within development. We've got a brilliant knowledge of that. So we have a unique advantage in that perspective. So I think we need to innovate. We need to use innovation within the built environment. And that is what we would like to be part of, and timber is an important part of that. So we think it's worthwhile finding solutions to those challenges. We feel confident about finding solutions, and we've got a brilliant infrastructure of experts within the UK real estate industry with an amazing knowledge of all sorts of building methodology and construction methodology, and we're really bringing in those experts into our projects to make the most of it.
From an investment perspective, the market's obviously 70% off, depending on which outlet you kind of read. Are you seeing material impact in terms of transaction volumes, but you're seeing that as an opportunity now to strike and take advantage of the market and the capital and the strategy that you're running?
The market's changed the most it has done in my 20-year career. So there's been big changes in terms of value, historically in terms of retail, now offices. So there's big changes, and not just short-term changes, but long-term changes as well. I think it's a fantastic opportunity to come in. We are lucky. As Bywater, we don't have legacy projects. We sold a lot in the last couple of years. The projects that we have, the longer-term projects, we don't have debt on it. We have a longer-term vision on it. So we are quite fortunate from that perspective. So we are now buying into this market. So from our perspective, starting Bywater Phase 3, it's a perfect time. We have to be very careful about it. But when we're looking at it with a longer-term view, it's an advantage for us. It's not just about making profit and increasing our IRR or maximizing our IRR. We have other leading objectives as well.
And can you combine purpose, property, and deliver a really healthy financial return? Or is that just, do you have to kind of compromise on anything?
Yes, you can do it all, but yes, you have to compromise on it. We're constantly making compromises. And that's where getting the right capital behind you. So when it comes to those difficult decisions, you're very clear about where your priorities lie. And so, yes, we are always making compromises. So, yeah, real estate is about compromise. It's about problem solving. But if you have that clear view of where you're going, it helps.
You touched on you've hired a couple of people and the plans to extend the team further. For someone listening to this, what are the attributes or traits or values that you look for in the people that you hire and get into the business? Obviously, they've got to be aligned to the values and what you're trying to achieve. But what specifically are you kind of looking for?
Now we're part of a much bigger company, but we're still a small business at heart. So someone being able to independently work is important for us. We want someone to bring their own character. We started off talking a little bit about diversity of individuals. I think we're working hard on bringing a diverse bunch of characters together. I've realized more and more how important that is in terms of decision making. To start with, Rich, Theo, and I were the sole decision makers. Of course, with very understanding backers behind us, but they relied almost exclusively on our own decision making. We need to bring in more diversity in terms of that decision making. So I want people coming in that are coming at it from a completely different perspective to add to that. So that's a very important part of it. But it also coming back to be able to independently work, to be able to bring their own point of view and voice their own point of view is a really important part of that. We are learning that being part of a bigger business, there is more infrastructure required, but I'm seeing it almost entirely positive at the moment. It's helping with our decision making. It's helping with our due process and due diligence. So at the moment, someone does need to be able to, let's say, have a professional enough background to work with that within that larger corporate background as well.
So you touched on residential strategy, workplace strategy. Is that in the UK, or is there a plan to kind of not go back to your roots, but extend through Europe as well and leverage your experience or your collective experience in those markets?
Europe is on our remit. The president of Sumitomo Forestry has a very clear ambition to grow in Europe. So we are looking at how we might go about that. Equally, we know we need to have a cautious rate of growth internally and in terms of our investment. So that's what we need to balance off. Right now, our priority is on the UK.
Yeah.
And we're looking to see how we can expand in Europe.
And the plan is to still, use Sumitomo Forestry, but you've got the flexibility to work with other capital partners or do other projects if they fit the values in due course as well. Again,
lessons learned from the last 10 years of investing, developing, bringing in culturally aligned partners. We are keenly looking to bring in other equity and debt partners, but they have to be culturally aligned. They have to share our purpose, share our vision for a sustainable development future, and have the right culture in terms of the way we work. So that's more important than bringing in the cheapest cost of capital. But yes, we are clearly looking at the moment for the right sort of partners that again can help us fulfill our ambitions in the UK and Europe.
What you touched on a lot of self-reflection, growing, learning. What have been the biggest challenges of going through these different step changes and the learning? Is it learning how to deal with relationships outside of work, compromise time? Is it having to upskill and learn things that you didn't know before? Is it trying to get mentors and people who've been on the journey ahead of you and getting their experience in? What?
I hope we're never going to stop learning. I hope learning is going to always be part of our job and our roles. I've realized, as I said, I think we are professional problem solvers. I think it's setting up a team that thinks differently about how to resolve challenges, how to look at things and come to solutions on issues that might arise. I think that cultural alignment is very important when you're looking at debt partners, you're looking at equity partners, you're looking at team members, making sure people are culturally aligned, but thinking differently about things is very important. So all of those attributes is something that we've really learned as a team to approach. And again, not to get too stressed about things. This is what we do, is enjoy those challenges about how to build a business, how to design ways of resolving challenges and problems that might come up.
You decided to become a B Corp. Why was that? I guess you were doing everything probably. Was it just a nice thing to have, or was it just trying to really cement and stamp what you were already doing on the business and have it recognised?
Becoming a B Corp we took quite a long time to make the decision. We were aware that it was quite a long process and difficult process to go through. When we did our first score on it, we actually smashed it because we were, as you mentioned, we were doing a lot of it already. So in terms of getting the right score for us, that actually wasn't a difficult process. But the audit and the diligence process they went through was really thorough and brilliantly so. So that took a lot of time. We thought it was quite important to get that recognition. So from that perspective, we thought, we're doing it. Let's go through that journey and let's get it done. And so far, it's been an interesting experience. It's a nice certification to have. I think we need to, as a group of UK companies, development companies that have that, we need to come together more. We need to work more positively together about how to make the most of the B Corp family.
If you cast your mind back when you first went over to Northern Ireland, going to go and play rugby, did you think you'd ever find yourself in this position you are now? Owner of an unbelievably successful business with a phenomenal future ahead. Have you kind of matched your own ambitions, or are you still eager and keen to reach your full potential?
We've still got a long way to go in the journey. I'm 41. I don't really ever want to retire, so I don't even think we're halfway through yet. I've been working for 20 years now. I've easily got another 20 years left. So yes, I completely thought I'd be where I am now. But we've got a long way to go in terms of growth, in terms of improving the business, in terms of fulfilling our ambitions of making an impact on the built environment.
As we draw to a close, the question that I ask everyone on the podcast is, if I gave you £500 million worth of capital, who are the people, what property, and which place would you look at deploying that capital? You've been on a journey in terms of building the team. You've got the workplace strategy. You've got the residential strategy. If you can't have any of those, which would be the third strategy that you would look at running?
If you can't have the office strategy, the workspace strategy, the living strategy, I love the concept of new towns.
What's a new town?
Milton Keynes. Let's use that as an example. My granddad was a joiner for over a decade on Milton Keynes when it was being built up on various housing projects. And I used to go on the building site with him and watch Milton Keynes grow from virtually nothing, various pieces of land brought together to come together to be a really important part of the UK country, nation. I think we have 500 million quid. Maybe it's not enough to buy and build a new part of a new town together, but it's certainly a good start. At the moment, we've got huge issues, social issues, housing, education. We've got funding issues. I think in terms of a blank sheet of paper, and let's use Belfast as an example. Belfast is unfortunately has experienced a lack of development over the last couple of decades. Fortunately, there are a number of empty sites, which I would refer to as a blank sheet of paper. If you can look at that with a longer term perspective and go, right, what does this city need? It needs housing for its students. It needs housing for its workforce. It needs housing for its elders. We've got to do that. It also needs schools. It also needs more investment in healthcare. I'd like to look at how we would start on a city basis. How can you invest 500 million to a city across all sectors, but with a longer term vision?
Maybe that 500 million is your very small co-invest, and you bring in a very well capitalized partner or two to deliver on that. Well, Paddy, you've had a phenomenal background career, and you've clearly pushed yourself and run at things incredibly hard. And put your all into every single project and left nothing on the table. And I'm really excited to see you and the wider team go on to achieve your very ambitious, but I know you will realise the plans and the goals and the impact that you'll have across everything you touch. And I've enjoyed being a very small part of the process in terms of helping you add some talent into the business. And like I said, genuinely really keen to see how you guys continue to go and trailblaze.
Thank you very much, Matt.
Not at all. Thanks, Paddy. Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information, or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next time.